New regulations for Kenyan diaspora tax reporting to take effect in 2026. The Kenyan government has announced that new tax reporting obligations for its citizens living abroad will be enforced starting January 1, 2026. This move is part of an effort to streamline tax compliance and ensure that all income generated by Kenyan citizens, regardless of their country of residence, is appropriately declared and taxed according to Kenyan law. The announcement was made by the Kenya Revenue Authority, KRA, which outlined that the new regulations would require Kenyans in the diaspora to file annual tax returns detailing their global income. This legislation aligns with global standards of tax transparency and is intended to curb tax evasion among citizens residing outside the country's borders. Under the impending regulations, Kenyan expatriates will need to report income from various sources, including employment, business ventures, property, and investments. The KRA has emphasized that this measure is not aimed at increasing the tax burden on its citizens abroad but at ensuring fairness and equity in tax collection. Tax experts have noted that the shift reflects a growing trend among nations to capture revenue lost to tax havens and undeclared overseas income. Many countries have undertaken similar initiatives, driven by international frameworks such as the Common Reporting Standard (CRS), spearheaded by the Organization for Economic Cooperation and Development (OECD). The CRS mandates the automatic exchange of financial account information between governments to combat tax evasion. In preparation for the new rules, the KRA has embarked on an awareness campaign targeting the diaspora community. The campaign includes webinars, informational materials, and collaboration with Kenyan embassies and consulates worldwide. The aim is to educate citizens abroad on compliance requirements and the procedures for filing taxes from overseas. To simplify the process, the KRA is developing an online platform that will allow diaspora citizens to submit their tax returns electronically. This platform is expected to be user-friendly and will offer a secure way for users to manage their tax obligations remotely. Additionally, the KRA has pledged to provide support to those who may encounter difficulties in understanding or fulfilling their tax duties under the new system. According to officials, failure to comply with the new tax reporting requirements could lead to penalties, including fines and potential legal action. The KRA has reiterated its commitment to enforcing these regulations while also recognizing the need to provide support and resources to ensure compliance is achievable for all affected parties. Kenyan citizens abroad contribute significantly to the national economy through remittances, which have been a stable source of foreign exchange. In recent years, remittances have amounted to billions of dollars annually, underscoring the importance of the diaspora to Kenya's economic landscape. The new regulations are not expected to affect the flow of remittances, as they are primarily concerned with income earned abroad. The introduction of these tax regulations follows a series of reforms aimed at enhancing revenue collection and improving public services in Kenya. These efforts are part of a broader economic strategy to boost fiscal stability and ensure that all citizens contribute equitably to national development. As the implementation date approaches, Kenyan expatriates are encouraged to seek guidance from tax professionals and utilize available resources to ensure they meet their obligations under the new framework. The KRA continues to engage with stakeholders to address concerns and provide clarity on any outstanding issues related to diaspora tax reporting.